When you walk down the aisle of a supermarket, you feel like you are in a world of endless variety. You can choose Coca-Cola or Pepsi. You can buy your hygiene products from Unilever or Procter & Gamble. You can fly on Delta, United, or American Airlines. You can bank with J.P. Morgan, Wells Fargo, or Citi. We are raised to believe that these companies are bitter enemies, that they are gladiators in the arena of the free market, fighting tooth and nail for your dollar. We call this competition. We call this capitalism. But what if I told you that this competition is largely an illusion? If you pull back the curtain, if you ignore the logos and look at the ledgers, you will see a different reality. You will see that the largest shareholder of Coke is also the largest shareholder of Pepsi. The largest owner of the airline you fly on also owns the airline you didn't choose. There is a single shadow that falls across the entire global economy. It is a financial giant that manages over $10 trillion in assets. To put that number into perspective, that is more than the GDP of Germany, Japan, and India combined. They are not a bank. They are not a tech company. They are not a government. Yet, they have the ear of presidents, the keys to the Federal Reserve, and a voting bloc large enough to fire the most powerful CEOs on Earth. Their name is BlackRock. And today, we are going to uncover how one company quietly conquered the world without most people even noticing. To understand the machine, we first have to understand its architect, Larry Fink. Before he was the king of Wall Street, Larry Fink was just a guy who made a very expensive mistake. In the 1980s, Fink was a rising star at the investment bank First Boston. He was making the bank millions. But in 1986, his department made a wrong bet on interest rates. In a matter of months, the bank lost $100 million. Fink was humiliated. He was pushed out. But that failure taught him a lesson that would change financial history. He realized that Wall Street didn't understand risk. They were gambling blindly. So, in 1988, he started a new company in a small one-room office. His goal wasn't to make the highest returns by gambling. His goal was to manage risk better than anyone else. He wanted to use computer models to see the future before it happened. He named the company BlackRock. For the first few years, nobody paid much attention, but Fink had a vision. While everyone else was trying to pick the next winning stock, like a gambler at a casino, Fink decided he would do something else. He wouldn't try to beat the market. He would buy the market. So how do you go from a small office to $10 trillion? The answer lies in a boring financial term that changed the world: passive investing. For decades, if you wanted to invest, you gave your money to an active manager. This was a guy in a suit who would charge you high fees to pick stocks he thought would go up. The problem? Most of these guys were terrible at their jobs. They rarely beat the average market return. Then came the ETF, the exchange-traded fund. Instead of paying a guy to pick stocks, you could just buy a basket that holds every stock in the S&P 500. It was cheap, it was automatic, and it was safe. BlackRock went all in on this strategy with their iShares brand. Suddenly, pension funds, endowments, and regular people realized, why pay high fees to lose money? Let's just give it to BlackRock. Trillions of dollars flooded in. Today, BlackRock, along with Vanguard and State Street, form what we call the Big Three. Together, they control about $20 trillion. If you have a retirement account, a 401k, or a simple investment app on your phone, chances are your money is sitting in BlackRock's pocket right now. But here is the catch. They don't own the money. You do. But they own the power that comes with it. This brings us to the most controversial part of the story. When you buy a share of Apple through a BlackRock ETF, you are the economic owner. You get the profit, but you do not get the vote. BlackRock keeps the voting rights. This is called proxy voting. And when you have trillions of dollars worth of votes, you become the most powerful landlord in corporate America. BlackRock owns about 5% to 10% of almost every major company. That might sound small, but in the corporate world, that makes you the dominant shareholder. It gives you the power to swing elections at board meetings. Larry Fink uses this power. Every year, he writes a famous letter to CEOs. In these letters, he tells companies how they should run their businesses. Lately, he has pushed for ESG, environmental, social, and governance policies. He effectively tells companies, if you don't lower your carbon footprint, or if you don't diversify your board, we might vote against you. In 2021, strictly to prove a point, BlackRock helped vote out 3 board members of ExxonMobil, one of the most powerful oil companies in history, because they weren't moving fast enough on climate change. Whether you agree with his politics or not, the implication is terrifying. One man, unelected by the public, has the power to force the world's biggest companies to bend the knee. But voting power is only one arm of the beast. The other arm is digital. Remember Larry Fink's obsession with risk? That obsession birthed a supercomputer named Aladdin. Aladdin stands for Asset, Liability, Debt, and Derivative Investment Network. It is a massive AI system that monitors the global economy in real time. It runs Monte Carlo simulations to predict how a war in Europe, a pandemic in Asia, or a tax hike in America will affect the price of everything. Aladdin is so good that BlackRock rents it out. Competitors like Vanguard use it. Insurance companies use it. Even massive tech companies like Apple and Microsoft use it to manage their own corporate treasuries. It is estimated that Aladdin oversees at least $21 trillion in assets. If Aladdin were to glitch or be hacked, the global financial system would likely freeze. It has become the single point of failure for modern capitalism. The reliance on this system is so deep that governments have no choice but to trust it. This isn't a conspiracy theory. It is a matter of public record. In 2008, when the housing market collapsed and Wall Street was burning, the U.S. government didn't know which banks were toxic and which were safe. They didn't have the data. So, the Federal Reserve called Larry Fink. They hired BlackRock to clean up the mess. The government gave BlackRock the contracts to manage the toxic assets of Bear Stearns and AIG. Then it happened again in 2020. When the pandemic hit and markets crashed, the Federal Reserve needed to stabilize the bond market. Who did they hire to buy the bonds? BlackRock. Think about the conflict of interest here. The government hired a private company to manage a bailout, that would directly affect the assets that same company owns. This cemented BlackRock's status as the fourth branch of government. They are too big to fail and too connected to ignore. So does BlackRock own the world? In the literal sense, no. They are custodians. They are holding the assets for grandmothers, firefighters, and young investors saving for the future. But in the practical sense, they are the permanent government of Wall Street. They have centralized the decision-making power of the global free market into a single skyscraper in New York. While politicians argue on TV, and while we argue on Twitter about which brand is better, the capital flows of the world are being directed by a quiet algorithm and a team of risk managers who answer to no one but their shareholders. The next time you see a headline about a corporate merger, a housing crisis, or a sudden shift in the economy, look closely. You will likely find BlackRock's fingerprints all over the scene of the crime. If you enjoyed this deep dive into the machinery of our economy, make sure to subscribe to EconHours. We are just getting started unraveling the system. Thanks for watching.